We are expecting a number of new tech IPOs coming down the pipe. Airbnb, Bumble, DoorDash, at least these are the ones that maybe regular folks would have heard of. Do you think these are also tech companies that have the potential to, cause huge jolts in the market when they drop?
Well, whether they can influence the entire market depends on how big they are. Keep in mind that the only reason that the FANG stocks, Apple and Amazon and all the rest have such a big influence is because they are so valuable.
The S&P 500 closed at an all-time high today.
Hi, everyone. Welcome to Money Always Talks. This is a show where we take a step back and look at what money is trying to tell us about ourselves. And today we want to focus on why do tech stocks have the ability to make the market go up and down so often? I'm Matt, the producer, and joining us from Florida is John Dobos. John, what's going on, man? I love this new background you got going on.
Yes, the East Bay Golf Course behind me. Nice to be with you, Matt.
I don't think it's any surprise to anybody how big and influential tech companies are in our current day-to-day life. And, it's sort of hit that science fiction vision that we've had of like OCP and RoboCop or Weyland-Yutani and Aliens, these big overarching tech companies. But the one thing that I've noticed recently is it seems like any time a Facebook or an Amazon or a Tesla has any sort of stock valuation dip or rise, it feels like the entire market has like a little mini earthquake. So what I wanted to ask you was, how is it possible that only, say, 5 to 6, 7 companies have that much of an impact on the entire thing?
The short answer is that they're so big. The way that the S&P 500 is made up, each company has a weighting in the index. They're not just 500 equal weights of each of the companies. They're bigger according to how big they are in terms of market capitalization. That's the stock price times the number of shares outstanding. So when you get a company that's over $1 trillion in size, like Apple or Amazon, they're going to be a bigger weighting of the S&P 500 index. And as you pointed out, the fact that these companies are so big, they do exert an undue influence on the overall market.
Last month, I saw a headline in Forbes that US tech stocks were worth more than the entire European stock market, which is a stat I really had to pause for a second and really think about how big that actually is. Does that surprise you at all, or is that just kind of our new normal at this point?
Not totally a surprise, just because they are such a big force in the US market, and they don't just sell within US borders, keep in mind. The Apple sells their phones all over the world. Google operates everywhere except for China.
So do you think tech is where it's at because it's the fastest growing industry and, like in the Matrix, it's sort of this form of our own human evolution?
You had your time.
Or do you think it's because it's one of the more visible industries? People see a new iPhone or a Cybertruck and they want to jump on to that energy.
Well, it's not just the visibility, it's the reality of the situation. And it's in an environment like we have now, where growth is really hard to come by. People will pay fantastic valuations for companies that are growing. And the growth these days is coming from companies like Amazon and Apple and Facebook and Google, Netflix, all those guys.
Whenever you're hearing people, on CNBC or other just on the market talk, you hear a lot about how they're saying, oh, this is a correction that's needed, or that like tech they're overvalued, or maybe some are undervalued. But, what do you think is driving that conversation of people thinking that these companies are really worth more than they should be?
There's an old expression that says trees do not grow to the sky. So even if a stock is undervalued and the company is still growing and a great investment over time, there's still going to be periods of time when the stock will, like a ratchet, like a roller coaster when you're going up that big hill. There's going to be dips, and there's going to be times when the stock pulls back. The old saying, there's a lot of old sayings on Wall Street, aren't there? But another one of them is that, stocks move from weak hands to strong hands. So when the going gets tough and then, you've got something with like 100% gain over the last 2 years, and it's down 10%, people tend to freak out and sell their shares. But those who are truly committed and maybe more knowledgeable will view it as a buying opportunity.
All right, time for us to wrap this up, but let's rewind to go over what we learned. So why do tech stocks have the ability to make the market go up and down so often? Well, some of the big players are just really big. They have large market capitalization, which is the total value of a company as determined by the stock market. Apple and Amazon, for example, have market caps of over $1 trillion. Their sheer size allows them to shake up the market with their prices. Tech is also one of the few areas in the market where you can find large growth. Other industries just don't have that kind of momentum, so it's natural for investors to want to get on board with something that's getting bigger, and they'll pay a lot for it. Thanks for watching this episode of Money Always Talks. We'll be back soon to figure out what else money is trying to tell us.